Okay. Good evening, everyone. So we'll start with a fresh unit. Okay, just a minute. So again, it's a combined portion for commerce students. It is unit 3. The topics that are going to be covered is meaning and scope of business economics, objectives of business firm, demand analysis, consumer behavior, law of variable proportion, theory of cost, price determination, and pricing strategies. Okay, so these are the, you can say, the topics for commerce. Now if you see the management syllabus, then in your unit 1, okay, in your unit 1 you have a portion managerial economics, concept and importance, again demand analysis, market structure, national income, inflation. So these are the portions that are actually there in both commerce and management. So it's a combined portion. So let us start with the first one, meaning and scope of business economics. Now we are starting to deal with business economics first. Now there's a definition by MC Nair and Merriam. Business economics, when we talk about business economics, it consists of the use of economic modes of thought to analyze business situations. So whenever we are going to analyze the business situations, we will obviously look into the various economic modes of thought. There is one more definition by Siegel Man. He has defined managerial economics, or you can say business economics, as the integration of economic theory with business practice. Whatever economic theory we have and whatever application, you can say integration, in other words we can say application of economic theory with business practice. Now what? For the purpose of facilitating decision making, any decision we want to take, any forward planning we want to do, for the purpose of that, Cecil has defined managerial economics or business economics as the integration of economic theory with business practice. Okay. Next, what is the nature of business economics? When we are discussing today, the today topic is business economics. So we need to understand the nature also. There are two lines. One is normative focus, one is positive focus. Now what is normative? Normative focuses on prescriptive statements, simple rules which are aimed towards attainment of specific goals. Just remember that one. These are already predefined rules, prescriptive statements. You cannot go beyond that. And what is positive focus? Positive, on the other hand, it focuses on description. It aims at describing the manner in which the economic system operates without staffing. Okay, any staffing means right person at the right job at the right time. So one is normative. Normative means already predefined rules and regulations. And another is positive, depending upon the situation, depending upon the system, the description is done. So in business, we cannot go beyond the concepts. We cannot go beyond the rules and regulations that are mentioned. So the emphasis in business economics is on normative theory. Okay, all of you? Can you understand? Can you hear my voice? Please let me know in chat. Okay, fine. Next. What is the scope of business economics? Very, very important. These are the 5 important points under which the scope of business economics falls. Now, the scope means jurisdiction, right? When we say scope, that means what? Vastness or jurisdiction. So these are the scope of business economics. One is demand analysis and forecasting. cost and production analysis, pricing decision, policy and practices, profit management, capital management. Now see individually. When we are talking about demand analysis and forecasting, what does it mean? Okay, we are trying to find the demand. Okay, now demand is related to quantity, right? How much quantity is sold in the market, or how much quantity is required by the customers in the market. So whenever we are talking about demand analysis and forecasting, it is related to transforming productive resources into goods which can be sold in the market. Okay, because raw materials we cannot sell. We need to sell the productive resources in the market. So a major part of business decision making actually depends on demand. Now, if the demand is not done properly, if there is a shortfall, then what will happen? Customers will be dissatisfied and they will go in search for some other company. If there is a overstocking of goods, then what will happen? It will be in a loss, because the goods which are not sold in the market, it will be of, like, it can be outdated and it may no longer be used by the customer. So ultimately it will be a loss to the company. So it depends. Neither it can be too short, nor it can be more than the required. A demand forecast can serve as a guide to management for maintaining and strengthening market position and enlarging profits. Okay, so demand forecast actually helps in this way. Now, demand analysis helps to identify the various factors influencing the product demand. The different factors, when we are going for finding out what are the factors related for product demand. Now, obviously, the taste and preferences of customer will come into question. The segmentation factor will come into question. Targeting factor will come into question. So these are nothing but the different factors. And it also provides guidelines for manipulating demand. So demand analysis and forecasting, these provide the essential basis for business planning, and obviously they occupy a strategic place in managerial economics. So the main thing that are going to be covered under demand analysis and forecasting in managerial economics are demand determinant. We will find out the demand determinants. We will find out the demand distinctions, and we will go for demand forecasting. In the later on part, we will be discussing the techniques of demand forecasting. You will be surprised to see how many techniques of demand forecasting are there. So whenever we are talking about vastness and scope of demand analysis and forecasting, three important functions or three important topics are covered. One is demand determinant, one is demand distinction, another is demand forecasting. Understood? Any doubt? Any doubt? Please let me know. Okay. Okay. So next was cost and production analysis. Very important, because we have something known as BOP or BEP. Benchmark. Okay. Simple, we can say benchmark line, or you can say a point where there is no profit or no loss. What is that point known as? Anyone?
BOP.
Break-even point.
Yes, break-even point. So either of the case, you can say whatever. Either it can be BE, benchmark, like means benchmark is the highest. Beyond that, suppose Tata is the benchmark in passenger cars. So all other XYZ companies try to aspire like Tata. And what is BOP? Now I am a startup company. I will try to find out what will be or how many years will it take me to find out or to go to that place where there is no profit or no loss. So either of the case, whether it is a benchmark case or a BOP case, we have to go for a cost and production analysis. Not necessarily. Any company, any startup, any organization, if you are doing business, you have to go for cost and production analysis. Now see, A study of economic costs combined with the data drawn from the firm's accounting records can actually help for any cost estimate, and as a result it will be useful for any management decisions. An element of cost uncertainty exists, okay, because we do not know, because there are certain factors, there are certain costs which we do not know, and they are not controllable. Okay, they may not be controllable also, and which we do not know. For example, in Odisha we have surprise cyclones. Now in the last year we had faced Fani. Now see, the new, or this COVID-19 only, you see, no one had even thought or even dreamt in their mind that such a situation will come. But they are doing business, they have to sustain, they have to go for cost and production analysis. So certain factors are there which we don't know. Okay, so discovering economic costs and the ability to measure them are the necessary steps for more effective profit planning, cost control, and sound pricing practices. So what are the, okay, now see, when we are talking about production analysis, it is very narrow. Obviously it is very narrow in terms of scope, in terms of vastness, because it will be only related to production, physical terms. But when we are talking about cost analysis, we are talking about monetary terms. Everything is included in there. In fact, your production analysis or production cost is also included here. So it's a broader concept. So what are the topics that are covered under cost and production analysis? The different cost concepts and classifications, the cost output relationships, economics and diseconomics of scale, production cost, and cost control. So when we are talking about scope of business economics, second point will be your cost and production analysis. And these are the important points that we need to cover. Okay. Next is your pricing decisions, policies, and practices. Very, very important. Without pricing, of no use, because price is the, you can say, is the revenue that comes into the organization. So price determination in various market. How many types of markets are there? Anyone? Can you answer? Can anyone answer how many types of market? No one? Market is divided into two categories. One is imperfect and perfect, right? Okay, this is very you can say confusing. You might have heard about monopoly market, oligopoly market. Okay, so monopoly means one buyer. Can you give me an example which is a monopoly market? Any example? Your train ticket bookings, only IRCTC does. It's a monopoly market. Your defense is a monopoly market. Oligopoly, very few buyers are there, right? And there are other forms of markets also. So in individually, in every market, we have to determine price. It cannot be the same. The market, the price which you are charging in monopoly is not the same in that of oligopoly, won't be the same in perfect competition market, won't be the same in imperfect competition market. Okay, so the factors which we are going to deal in pricing decisions are pricing method, differential pricing, product line pricing, price forecasting. When we will be talking about discussing about price, then we will be discussing all these points. Okay. The next point is profit management. Obviously, if there is no profit, then why the hell we are going to do business? Obviously, and one more thing is very important. We want to sustain in the long run. Sustain in the long run means long-term profits. Long-run profits are also very, very important. If we know about the future, or if knowledge about the future were perfect, then profit analysis would have been a very, very easy task. Any XYZ could have come and done it. But in a world of uncertainty like this Corona time, COVID time, 8 months, 8 to 9 months, the companies are shut down. People have lost their jobs. There is no economic growth. What would you do? What the business person, how would they expect a profit? I don't think it's that easy. So it's very difficult. Now, important aspects which are going to be covered under this area are the nature and measurement of profit. How much profit we must forecast each month or a year. Profit policies. And we need to find out the technique of profit planning like break-even analysis. So this is the scope, or these are the important points that we are going to focus on the profit management. Next is capital management. Now, capital means what? Simple definition of capital means what? The initial money that is contributed by the business owner in the business is known as capital. So, among the various types of business problems, the most complex and the problematic thing is related to a firm's capital investment, an organization's capital investments. Very important, and it's a very challenging task because here investment is going to be done. If it is done in a wrong place, then the firm is going to incur a huge loss. Okay, so see, large sums are involved. Problems are so complex that their solution requires considerable time and labor. Often, the decision involving capital management are taken by top management. So, what actually is coming under your capital management? It means planning and control of capital expenditure. So, what are the topics that are covered here? Cost of capital, rate of capital, selection of projects. Okay, so these are the important things which we are going to deal with the under capital management. Clear, all of you? The 5 points. First was demand analysis and forecasting. Here we had 3 things: demand determinant, demand distinction, demand forecasting. Cost and production analysis, we have cost concept and classification, cost output relationships, economics and diseconomics of scale, production function, and cost control. Under pricing decision, we have pricing under different market forms, pricing method, differential pricing, product line pricing, price forecasting. In profit management, we have break-even analysis, nature and measurement of profit, and profit policies. And under capital management, you have cost of capital, rate of return, selection of projects. Clear till this much about the scope of business economics? Any doubt?
No.
All these we will discuss, because the worst part is management syllabus doesn't have any you can say expansion of the subunits which the commerce syllabus has. But if you compare both the syllabus, everything is included in both the two. Like whatever you are going to learn in commerce, that only you are going to learn in management. But this management people have not written the subparts, which the commerce people have clearly written. That is the worst point. Okay, so fine. Just give me 1 minute break, and then we will start with managerial economics. Okay, just 1 minute. Okay, fine. So let us discuss something about managerial economics. Okay, so managerial economics means what? It is the study of economic theories. How many? We have many economic theories. logic, tools of economic analysis that are obviously used in the business of process of, in the business decision making process. Now, what happens here? Economic theories and techniques are actually applied in business problems. Evaluate business options and opportunities with a view to arrive at an appropriate business decision. So this normally is simple. Just remember, what is managerial economics? It is the study of economic theories, logic, and tools of economic analysis, and which are obviously applied in the process of business decision making. Okay. Next. Managerial economics is that subject which describes how economic analysis is used in taking business decisions. See, same thing they are saying. Simple, whichever the application of economic theories, tools of economic analysis in the decision making process is known as managerial economics. One more definition also I have written. See, in the down it is written, managerial economics is that discipline which uses economic concepts, principles, and economic analysis in taking business decisions. Same thing, different people have written in a different way. Okay. Now see, these are the nature or characteristics of business economics. Can you see, all of you?
Yes, ma'am.
Okay. I'll discuss individually, then I think you will be able to understand. First point is managerial economics is a science. Now, why managerial economics is known as a science? Simple, because it establishes relationship between cause and effect. If this is the cause, suppose there is a change in the price of a commodity, what will be the change in the demand of the particular product? Okay, so it is here studying the cause and effect. That is why it is known as a science. Simple. It is also known as an art. Why it is known as an art? Because it develops the best way of doing things. It helps management in the best and most efficient utilization of limited economic resources. That is why it is known as an art. Because suppose the organization has very scarce resources, it knows how to do the work there with the help of very scarce resources. So that is why it is known as an art. Managerial economics is a microeconomics. Why it is known as a microeconomics? Now see, two categories we can divide, macro and micro. Why it is known as micro? Mainly managerial is related to micro. Now what is micro? Micro means when we are targeting on an individual economic unit. That is known as microeconomics. Now in managerial economics, we are actually studying a business organization or an individual industry. So that is why we say managerial economics is a microeconomics, not a macroeconomics. Macroeconomics means the general one. Political environment, sociological environment, technological environment. We see that. Managerial economics is the economics of the firm because we study about the organization. We study about the economics of the organization. We study about the theory of the organization, different concepts, different principles related to that. That is why it is known as the theory of the firm or economics of the firm. Now, managerial economics uses macroeconomics. I said, whenever you are taking any decision related to your organization, what you are taking into consideration? What is the legal scenario now? What is the political scenario now? Is there any technological change in the environment that has taken place? Are we not taking those into consideration? So thereby we can say managerial economics uses macroeconomic analysis. Next point. Managerial economics is pragmatic. Now, what does pragmatic mean? Pragmatic means it is actually concerned with practical problems and results. Okay, no abstract thing is here. Simple practical solutions which we have to find out. That is why it is known as pragmatic in nature. Managerial economics is normative science. We had discussed, right? Normative and positive. Normative means everything is predefined. So managerial economics has to work within the predefined guidelines. It is not positive. It is not descriptive in nature. It is normative in nature. Okay. It studies what should be done. Now, aims at helping the management, because we are going to take decisions, because we are charting plans and policies for future. So managerial economics is actually aiming or aims at supporting the management, okay, from time to time. Prescriptive rather than descriptive. I said, right, it is normative rather than positive. Normative means prescriptive. Descriptive means positive, right? So it's a normative and applied science. It suggests the application of economic principles with regard to policy formulation. Okay, it does not go for much description. Already predefined things are there. Suppose this situation will happen, you have to tackle in such a way. These are already laid down. Okay, so that is why it is known as prescriptive rather than descriptive. Clear? Clear till this much?
Yes, ma'am.
Okay, this is repeated scope of managerial economics or scope of business economics. Whatever you get, you will have these 5 points only. Demand analysis, cost analysis, pricing policies and practices, profit management and capital management. We just now discussed. Okay, clear? Okay, apart from that, we have 5 more. Analysis of business environment. It is also coming under scope of managerial economics. Analysis of business environment. Now, what analysis you have to do? What are the factors you will take into consideration? What is the economic system of the country? What are the business cycles? Are there any fluctuations in national income and national production? What is the industrial policy of the government? Whether it is a trade policy or a fiscal policy, whether it is a taxation policy, licensing policy, political government, social factors, trend in labor and capital markets. What is it right now? So this analysis of business environment also comes under your what? Scope of managerial economics. Now a simple question comes to my mind. What is fiscal policy? Any idea what is a fiscal policy? Simple one line definition, one liner. Okay. And fiscal policy is known as what? Yes. Okay. So let me say fiscal policy, you can say it is the use, see whatever government revenue is collected, right, from tax or tax cuts. So fiscal policy, you can say it is the use of government revenue collections, whatever revenue is being collected in the form of taxes and expenditure to influence a company's economy. That is known as fiscal policy. Okay, clear? But if I'll ask you, then what is the meaning of monetary policy? Another question comes into mind. What is monetary policy then? Right? Monetary policy, simple, remember, it refers to the actions, okay, which are normally taken by a nation's central bank. What is the central bank of our country? RBI. To control money supply and obviously to achieve sustainable economic growth. That is the meaning of monetary policy. Okay, fine. So let us go back. Okay, suppose in some questions or somewhere you might get a question like this. Someone can write also fiscal policy, or what is the other name of fiscal policy? It's also known as dash policy. Okay, just write somewhere in the keynote. Okay, next is your inventory management. Now what happens in an inventory management, because we are talking about an organization. Okay, it refers to stock, not only stock, raw materials, work in progress, and your finished goods. Everything clearly it has to be followed. A proper inventory system has to be done. Normally in organizations, ABC analysis is done. LIFO, FIFO method is used. Last in, first out, first in, first out. So different methods of inventory management are also used. Advertising is also coming under the scope of managerial economics or business economics. Here, managerial economics helps in determining the total advertising cost and budget, the measuring of economic effects of advertising, and obviously to form an integral part of decision making and forwarding planning. So these are the technical inputs from the advertising side to managerial economics. Now, when we talk about resource allocation, now what it is said, optimum utilization of resources. Now, how is it done? With the help of linear programming. Okay, we are selecting the best course of action. Next is risk and uncertainty analysis. What is the risk? How much uncertainty is there whenever we are taking any decisions, whenever we are going for any forwarding planning, whenever we are going for future prediction? These are very, very important from the jurisdiction of scope of managerial economics or business economics. Clear till this much? Clear or any doubt?
Clear, ma'am.
Okay. Economics is very boring, right? I think so. Next is your significance of managerial economics. Why? Normally, what is the importance of managerial economics in business decision making? Now, always remember, whenever we are going for any decision making, three stages are there. What are the three stages? First, what is our objective? We have to determine and define the objective. Second, what is the possible course of action? And third, we have to select the particular course of action. So economic analysis helps the management in following ways. First is reconciling theoretical concepts of economics to the actual business behavior and conditions. Obviously, we are applying the theoretical concepts to the actual business conditions, right? And then we are trying to go for any decisions, right? Next is estimating economic relationship. We are trying to estimate a relationship. We are taking different factors into consideration: income, elasticity of demand, whether we are looking into price elasticity, income elasticity, cross elasticity, cost, volume, profit analysis. Various factors are there when we discuss about business planning and when we are going for any decision making also. Next, predicting relevant economic quantities. Again, very important. If we cannot predict properly the economic quantities, then we will fall short of this factor, demand. When we cannot predict properly demand, then what investment in terms of capital, what production, what price, okay, what will be the cost and profit, everything will fail. So the business manager, he always works in the environment of uncertainty, but he has to predict properly the appropriate economic quantities that are going to be used. Neither he can fall short nor he can he can go beyond the required set. Fourth importance is why we are doing managerial economics is to understand the external forces. Now, always remember, the management gets affected by two factors. One is internal factors, another is external factors. Now, external, obviously, the firm cannot control. The firm has no control over those factors. But internal factors, the plan can have, the firm, the organization can have control. But when we are talking about external factors, although we cannot control, at least we can understand, at least we can forecast. So what are the factors that are normally taken into consideration when we go for any decision making process? Factors are economic system of the country, business cycles, fluctuations in national income and national production, industrial policy, trade and fiscal policy, taxation policy, and licensing policy. These are the important policies. Okay, these are the important external forces, right? Next is your basis of business policies. Okay, now the foundation of all business decision making is based on managerial economics, because it is the application, it is the study of organization of the industry as a unit, and based upon that we are going for any decisions. Next, clear understanding of economic concepts. See, this managerial economics only gives us the clear understanding of various economic concepts like cost, price, demand. For example, concept of cost will include total cost, average cost, managerial cost, fixed cost, variable cost, actual cost, and opportunity cost. So all the parameters of cost are actually covered. It is just an example. So all the economic concepts are clearly understood in case of managerial economics. And the last is increases the analytical abilities or capabilities. Why? Because number of tools and methods are there, right? Obviously, it will help in future decision making. It will help in the analytical capability of the business analysis. Okay, clear all of you? Clear? Any doubt? Just a second. Somehow I did a mistake. Just a second, please. I'm resharing. Okay. Any doubts till this much? Please let me know. Did you understand till this much? Through chat?
Clear, ma'am.
Okay, fine. So, next topic. Okay. So, these are certain questions we will discuss today because we are starting the session. So, I'll cover a bit less tomorrow. Not tomorrow. On Wednesday, again, we'll have a session and we will discuss more detailing up to, we'll cover more. Okay. So, first question. Economics is a science, is a science which deals with human wants and their satisfaction. Is it social, political, natural, and physical? Okay. Jasmine is very smart, good. Akanksha. Shweta and Lipsa, please answer. Okay, Lipsa gave. Still awaiting an answer from Shweta. Shweta, please give the answer. Okay, I think she's busy somewhere. Fine. So, okay. No, the answer is social. Okay, all of you. Economics is a social science. The key word is here because it deals with human satisfaction, human wants. So obviously it is a social factor. Clear all of you? Okay. Second question. Who defined economics as a study of mankind in the ordinary business of life? Who defined economics? Yes. Anyone? Only Lipsa gave the answer. Akanksha gave the answer. Jasmine gave the answer. And again, we are expecting an answer from Shweta. Okay, fine. Let's see. Yes, the answer to this question is D. I am sorry, no one is correct. Alfred Marshall. Okay. He defined economics as a study of mankind in the ordinary business of life. The growth of an economy is indicated by an increase in savings, increase in investment, increase in general prices, increase in national income. How would you determine the growth of an economy? Growth of an economy. Okay. Shweta, would you like to pay attention to pay? Would you like to change your answer? Okay, fine. So let's see. Growth of an economy, obviously, national income. Nowadays, you would be hearing a lot about this. नेशनल इनकम की वजह से हमारा नेशनल इनकम नहीं बढ़ रहा है तो हमारा ग्रोथ कैसे बढ़ेगा राइट फोर्थ क्वेश्चन sorry dash equals revenue minus all explicit costs dash equals revenue minus all explicit costs okay A, B, C options have already come. Let's see what is this answer. Dash equals, obviously the answer is accounting profit equals revenue minus all explicit costs. The father of new economics is Marshall, James Keynes, Adam Smith, and Karl Marx. Who is the father of new economics? Okay, father of new economics. Okay, Shweta, Jasmine, Akanksha gave an answer. Lipsa. Okay, see. The father of new economics is J.M. Keynes. Okay. The dash problem refers to the possibility that owners and their managers may have different objectives. First option, company manager problem, principal agent problem, firm employee problem, problem of different objectives. The dash problem refers to the possibility that owners and their managers may have different objectives. Which among the following? Okay, Akanksha, Lipsa, Shweta. fine. Let's see the answer. The answer to this question is principal agent problem, right? So I think no one gave this answer correct. So seventh question, let's move. Economic profit refers to dash minus all relevant costs, both explicit and implicit, both internal and external. Okay, or external and internal, whatever you can say. Okay, so Rashman gave a different answer. Everyone gave revenue. Okay, economic profit, obviously we had discussed, refers to revenues minus all relevant cost. That is known as economic profit, because you are dividing revenue and we are determining profit. Okay, so the interaction of individuals and firms in a market can be described as a dash of money, goods and services and resources through product and factor markets. What it is known as, which flow? Okay, sorry. The interaction of individuals and firms in a market can be described as which flow? Of money, goods and services and resources through product and factor markets. Oh, sorry, ninth question. Okay, waiting an answer from Lipsa. Okay, let's see the answer. Answer to this question is circular flow. Okay, circular flow. The interaction of individuals and firms in a market can be described. Obviously, it is a circular flow. The cycle starts from need, want, demand of goods and services or services. Then we go for an exchange. Then we go for a transaction. And finally, we end up in a market. And again, the cycle moves. So it's a circular flow, right? Question number 9. Dash focuses on the behavior of the individual actors on the economic stage. That is, firms and individuals and their interaction in markets. Okay. Fine. Jasmine, Shweta gave the answer. Kanksha, Bapre, all of you gave the answer. Yes, obviously, this we had discussed. It is known as macroeconomics. Normally, people in a happy mood, they put managerial economics, but actually the answer is micro. In a free market economy, the organization and interaction of producers and consumers is accomplished through the dash system. Free market economy. The organization and interaction of producers and consumers is accomplished through the dash system. Price system, cost system, revenue system, profit system. Okay. Akanksha is yet to give the answer. All of you have given a common answer. Yes, through the price system. Okay. So any questions in this class, today's class? Any doubt?
No, ma'am.
Okay, thank you. We will again meet on Wednesday at 8 p.m. Okay, the link is same. Okay, link is same. So please do
Okay,
not
ma'am.
wait for another link. The link will be same, and we will have a class on Wednesday 8 p.m. Okay.
Okay, ma'am.
And good night.
Good night, ma'am.
Night.